What's up, guys? It's Rey-Jay back with another video. And in this one, I wanted to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm also going to talk about why tomorrow is going to be a very important day as we have the PCE data report coming out that could cause some more volatility. And what the trust is suggesting so far looking at this trend. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY in uninvested cash. The offer ends very soon, in just about 11 days from now. Anyways, now let's talk about what's happening with the market. So, looking at SPY, what happened to the market is we saw the market essentially get this massive rejection after Jerome Powell gave his speech yesterday. The Fed has announced that they're not projected to cut rates as much as we initially thought because of the fact that inflation is once again creeping up. So, this is important because, yes, the Fed is going to continue to cut rates, but they may not cut them as fast as initially expected. And that implies that rates could stay a little bit higher for longer, which could affect the economy more negatively for longer as well. So just keep that in mind. With that news coming out, the market has shifted to a very, very fearful place, and the market's continuing to show some weakness as we try to rebound today. But despite that, whether we get some kind of like big bounce or an even bigger drop from here, it does depend on, to some extent, on some data that's coming out. So that's why I want to focus on the data first, and then I'll break down these charts. So just know that for today, we saw tech attempting to rebound to some extent, but Microsoft, Google, and many of these tech stocks were still quite flat. We saw Apple and Nvidia trying to push a bit higher, but then the rest of the market was very, very mixed with some green and some red. For example, Tesla was in the red, but Amazon was in the green. Some sectors were more red than others, whereas others were a little bit more green. So more of a mixed market for today, excuse me, but many of our ETFs and indices did show some weakness despite that. When it comes to the way the market's moving tomorrow, please remember it's going to be Friday, December 20th, 2024. So at 8:30 a.m. Eastern Standard Time, which is going to be 1 hour before the market opens, we have the PCE data report coming out. PCE is known for being another important inflationary measure that the Fed tends to prioritize. And Jerome Powell did talk about how the trend is showing inflation going up just a bit. But just to be very frank for tomorrow, okay, we're expecting core PCE month over month to be between 0.2 and 0.3%, which is the same as before. We're expecting PCE for all items month over month to be between 0.2 and 0.3%, the same as before. But we're expecting a slight increase in PCE year over year for all items to about 2.5%. That's a 0.2% increase compared to before. And then for core, we're expecting a 0.1% increase, which is basically at 2.9% in total. That's what we're expecting compared to before. It's a somewhat higher target. The last time it came out, it was at 2.8%. Now we're expecting 2.9%. That's what I mean by the 0.1% increase. So we'll see about that, guys, looking at the year over year data. Now, I just want to call out that when CPI data came out for the same month, and by the way, this data is coming out for the month of November. When CPI came out, this was a little bit hot. We saw a slight increase in all items CPI, whereas core was kind of flat. So that is something very important to remember. Inflation did show some signs of upticking just a bit. That's the reason why the Fed was being more careful when it comes to their rate increase, their rate cuts, and etc. That's why the Fed is announcing that they are planning on not cutting as much for like after 1 year, 2 years, and beyond, given the fact that inflation's anticipated to increase. So with that being said, we already know that there might be an increase in the data, and we are expecting that for PCE. But the question is, to what extent will it actually be? Will it be an even bigger increase than expected? And if this shows that inflation is going up, don't forget that the Fed tends to prioritize this data. It's going to be favoring more downside for the markets if we get a hot PCE report. The main two things are going to be the year over year pieces of data. So PCE, all items, and then core year over year. If they're at least like 0.2% above what we're expecting, that's not going to be the best of signs, and that could favor some downside. The last time CPI came out, we did get that, and CPI, wasn't that good. So we'll see about PCE if we're going to get the same thing or not. Then at 10 o'clock a.m. Eastern Standard Time, we have the Michigan Consumer Sentiment Data, the 5-year inflationary expectations and such. So wait and see what this ends up leading to. That's going to be another big factor worth watching. So give it some time. For other factors out there, just know we had some earnings that came out. We had Nike and FedEx announce their earnings. Nike saw some upside because their earnings were pretty decent. I say that because their revenue, despite being down year over year, it was at $12.4 billion, which was above expectations of 12.1 billion for the quarter. And then for their EPS, okay, made an earnings of 78 cents per share, which is above the projections of 63 cents. Not bad whatsoever. I think that that's a slight improvement compared to what we saw last time, but it's still down compared to what we saw last year. So not too bad. That's why the share price is doing quite well. And then when it comes to their expectations, I would just say that they're so. So not too bad in my opinion. I think that because they beat on earnings, that's why the share price is up. FedEx is also up quite a bit. Their earnings were mixed, but they did have some good news that came out. FedEx has announced that they are going to be spinning out their freight business. That is great news for them. That's going to help generate more revenue. And if anything, they had an EPS of about $4.05 above expectations of $3.98. And then their revenues at $22 billion, which was a tiny bit below the $22.1 billion expectation. Not bad, though. I would just say that's pretty decent earnings. Their guidance is not as strong as before. We're looking for about a $19 to $20 a share for the physical, year of 2025 for their EPS. So unfortunately, a little bit of a dip in their full year guidance, but because of the fact that they announced their freight business that's going to be spinning off, that's what really helped the share price still continue to hold up. Besides that, guys, that's it for my analysis of the other stuff. Let's just focus on this and I'll talk about the charts. So right now, there's a lot of fear in this market. The fear is returning. People are afraid because of the fact that the Fed is announcing that they're not going to be cutting as much as before. And that is, that is a little bit concerning for a lot of these businesses, especially businesses that are very sensitive to interest rates, such as the automotive industry and many others. And then we also happen to have the momentum, which is extremely fearful right now. So this is dipping closer to our 125 daily moving average. So I'm seeing some weakness right here. Besides that, the put to call option ratio is going up a bit. This is showing us that there's more put buying. There are more shorts entering in the market right now. People are becoming more fearful. And then the VIX is also at fear right now. It's making up the majority of sentiment. It did dip a little bit exactly as we predicted yesterday. I was talking about how it might be getting close to about 25. We're a little bit below that, but then we'll see if the VIX bounces again or not from here. Besides that, everything is favoring that the market is showing weakness and it's a lot more fearful. So what do I see from here? What is my analysis of these charts? Let's talk about this. So here's the thing, guys, okay? SPY dumped really hard yesterday after Jerome Powell's speech. We tried to bounce in the morning to 593, but notice that this is where our 4-hour 200 EMA happens to be. And we were not able to hold above it. We got a rejection again. We were range bound for the most part. SPY was just stuck between 587 to 590 for almost the entire day. But at the very last few minutes, we did see SPY start to dip lower to 586. So this just tells me there's a little bit of weakness that's building. There's weakness on SPY, and this is looking a little bit weaker. This could be favoring downside looking at the daily time frame as well. However, we have not lost critical support at 584-ish. If we were to lose 584, I think there's a risk of us coming down to fill that gap, taking us down to about 576. Yes, that could be coming, but we haven't officially lost critical support to turn too bearish yet. So we'll have to watch to see if that happens for tomorrow. So tomorrow it depends on PCE data. If we get a good PCE report, we have to try to reclaim at least 590. If not, if it's too hot, we're looking for a test of 584. If that fails us, we easily fall to 580, which is where we have previous resistance becoming support, followed by 576 to fill the gap. So please keep that in mind, guys. Going into tomorrow, there's a risk of us filling the gap, and in order for that to happen, we have to see us lose 584, by the way. But there is that risk of downside, so we'll see what happens. So please be very careful and very mindful of what I'm saying. And I still think that that's a very, very strong possibility looking at this chart. I know a lot of people think we're dropping too hard, we have to bounce, but that's not always a guarantee if you have like negative news that keeps on coming out. And also because of manipulation from Wall Street, because we already pumped so much. So we'll watch for a possible test of 584 tomorrow, and then we'll see if the gap gets filled or not. Not a promise, though. It depends on if we end up reclaiming 590 or not, or if we lose 584. I do see a risk of that, but it depends on this data coming out. And as you know, I am not some kind of fortune teller. I can't promise anything about the data. Data could also be very biased sometimes. So I don't know for sure what the data will look like. I just want to say that I have reason to believe that the data might be a little hot looking at how CPI came out hot. So we'll see. So that's why I just want to let you guys know the risk is to the downside, but just to be safe, we'll watch and see. Looking at ES, look at the chart, guys. We got this big rejection here. We tried to bounce, hitting very close to the 6,000 resistance. Then we rejected again. So this is very similar to what I was talking about yesterday. There's also this gap to fill down around 5880. So if 5900 fails us, we're looking for 5880. So it's showing weakness. I'm seeing weakness on the chart again. So to be bullish, if we get a decent PCE, we want to break 6,000 to go back up to 6,050. If we lose 5920, we're looking for a dip to 5900 flats, followed by 5880. Looking at the chart on the 4-hour and the daily, I would say that we do look a little bit more bearish, and I think the odds do favor this gap fill down here. But just to be safe, it depends on the data, so watch your levels just to be safe. If we could reclaim 5860, then 5880, we're looking for an attempt to get back above 6,000. If we lose 58 or 5920, I'm looking for 5900 flats, which is very close to where we were yesterday, followed by 5880, which is where the gap is. So watch those levels. Right now, ES does look a little bit weaker, so please be very, very careful, guys. For others out there, we have Nvidia. So Nvidia, it's not looking that great because the daily still has this giant head and shoulders, right? There's a left shoulder here, a head and a right shoulder. And the issue is we got a rejection on the daily. And let me talk about what I'm talking about. So we rejected off our 50 EMA here. We rejected off our 200 EMA right here. We pushed, and now we didn't do a good job at getting back above our 20 EMA in the 4-hour time frame. So I know there's potential in this to try to get back above it, but I'm just saying that right now we didn't really do what we should have done to turn back up. Tomorrow, if we get a decent PCE or if this tries to be resilient, we have to get back above 133 to turn back up to 136. If we can't reclaim 133, if we continue to reject off this is going to be at risk of falling to about 128 and 125 again. The trend is technically a little bit more bearish on Nvidia. We're making lower highs, lower lows, lower highs, lower lows. That's continuing to happen. And then the daily time frame, if you look at the daily, we have a lot of gaps down here. So I find that to be a little bit concerning. We have quite a few gaps taking us all the way down to like the 120 area. So be careful. There's a head and shoulders, and so far we're not doing the best of jobs at reclaiming our key resistance areas. So we'll see how it goes. We could go either way. We'll see if Nvidia reclaims 133 or not, but I just want to say the trend is technically more bearish if we don't. And for now, it depends on PCE. So we might not do that. We might start seeing a dip closer to like 128 again, but just to be safe, we'll be watching. Bitcoin looks weaker on the daily, but it is holding one support on the 4 hours. So this is like our support at 96,292. To be more bearish, you have to lose that. If not, it's going to try to rebound. So I think we will try to rebound to about 98,000. There should be an attempt overnight, but if the data drags this lower, it could still reject and continue to dip. To turn bullish, you want to get back above 102,000. Otherwise, this is still favoring some weakness. But look for a bounce tomorrow back up to 98,000. And we'll see if we reject or not again. So please keep that in mind. For Tesla, we're looking interesting. I think this is going to try to bounce a little bit tomorrow, but there's one problem. Look at the trend. We had a high here at the 485 area, came down, made a lower high, came down, and we could be making another lower high here. Look for a push tomorrow on Tesla to about 445. We're going to see if Tesla can break this high and outperform the markets to get back above 460. If it reclaims 460, we turn back up. We could be once again showing strength. But if we push to 445-ish to 450 and we don't break this high, that could be a sign that Tesla's going to reject again and make its move back down into the 420s. To be really bearish, you want to see Tesla close below 420. That's going to be our 50 EMA. For now, we haven't really done that. So I presume what's going to happen is we push tomorrow for 445. We might get close to 450. And then during the release of PCE, that's either going to cause us to bounce more or get a big rejection. So far, the trend is technically a little bit more bearish on Tesla, but we need to wait for confirmation because one thing I want to say is that Tesla is known for being very resilient, and there's no sign or confirmation yet that we have officially broken 420. So tomorrow, I expect a rebound for 445, maybe 450, as long as there's no bad news. And if we could break this high, then yes, we could actually make a nice comeback. If we can't break the high, if we get a rejection here, that's going to be a sign to me that this is going to return back down to the 420s and show some more weakness. I also want to mention the daily on Tesla has these gaps to fill down here. So be careful with Tesla because of that. I did call out the gap yesterday around this zone right here, and that did end up getting filled. So just keep that in mind, guys. For NQ, we look a little bit weaker on the daily. I'm going to be looking for a test of 21,260, so it does look a little bit weaker. But the 4 hour is still at the support here. It's not doing the best of jobs at holding nonetheless. So this is favoring. It's going to dip a little bit more. It depends on PCE though. So if we can reclaim 21,500 after PCE, this could try to bounce. If not, I am expecting 21,250, just like what I just said. So that imbalance would take us lower, not to mention the daily key EMA. So there's a risk of downside in NQ. Same thing with the QQQ as well. We tried to bounce on QQQ. If we could reclaim 520 after PCE data, then yes, we could be going for 524. If we don't hold above that, we're looking for another rejection. This chart is looking to me like it's going to reject again because it's not doing the best of jobs at holding up. And when you look at the daily, it looks very weak, especially as we have this gap down here to fill around 509, which is very close to our 50 EMA. Tomorrow, we'll see if we get a bounce to get reclaim 520 to turn bullish. But if we can't do that, this is going to be favoring a move down closer to like 509 or so. So we'll see about that, but I just want to say I see some weakness on this chart. I'm being 100% blunt and honest about that. Apple's looking so-so. So one thing that's interesting is that there's a war going on between buyers and sellers, and it's shuffling near 250. So if we can't hold 250, if we have a high here, if we come down and make a lower high, this could be revisiting 246.5. If it holds 250, we're looking for 252 again. Could go either way, but it looks like we have a lower high being established. So this might be dipping, so just be careful, guys. I am seeing a little bit of weakness on Apple. But with that being said, I went over a lot of details for these main tickers I typically talk about. I'm going to be a lot more brief with the rest of these just to save on time. So what do I see for the rest of these? Okay, Netflix not doing that great, just like SPY and the others, came down at a lower high, got this big rejection, came back up, and here's the problem. We have tough resistance around this 911 area. I was correct about this bouncing, but there's a gap here, and I think there's another gap on the daily. So if we can't reclaim 911, so look for an attempt to push around there, then we could be turning back down towards 900 flat, then 890. So it all depends if we can reclaim that support or not. Just keep in mind there is weakness. We are technically on a downtrend. We're only up 1%, but if we can't get back above 911, we could be coming back down. So we'll see about that. It depends on PCE, but there is still technically weakness. MSTR has some weakness. We're at support right now around 326. That's our 4-hour 200 EMA, but we are weak on the daily. I do anticipate a small rebound before it may continue to dip. If we lose 326 for confirmation, you're going to be expecting some more downside, especially as we have this gap to fill down here. There is some weakness looking at this structure, and this could favor downside. Look for a rebound at first. We might be looking for a retest of 340 or so. And then if we can't break past that, we're going to be turning back down towards the lower 300s. So please keep that in mind. There's still weakness on this chart. This will depend on the data for tomorrow. Celsius got a little rebound. Now, I just want to say that we could attempt to go a little higher to retest the 28.5 area. But if we can't reclaim that area, there's a chance that it just pushes and rejects. I also want to call out that the daily on Celsius also happens to have a little bit of weakness here. I presume that this might attempt a rebound, then we could be making a lower high here. So that could turn things a little bit lower. So just keep that in mind. We'll just have to see how things end up going. But look for a little bit more upside for now. I think 28.5 to 29 is going to be tested, and we'll see if it rejects or not. Of course, this also depends on PCE data, but that's what I'm seeing, at least technically. For Supermicro, we look weaker, especially because of what's happening with chip stocks. This is looking weaker. We could be looking for a move down closer to about the 39, the 30 area, then eventually the 29 area. So I see weakness on this chart still. It's not doing the best of jobs, especially as we're breaking structure here. This looks like it may start dipping to 30, if not lower to 29. So it still looks weak. Whether or not that gets a bounce or not depends on PC, but there's still weakness. I called out Palantir. I said that this chart might try to rebound, and that's what happened so far. We need to lose 74 and then 72.36 to turn back down. Otherwise, it's doing a good job at holding up. This might make an attempt to get back up to 75.8 as it's holding up well. We'll see how PCE data affects this, but overall, it's very resilient and it's doing a good job at holding up. Might be a small push to 75.8 tomorrow. As long as we don't do 74 and 72.36, I will favor upside. A little bit more upside. Rivian is looking so it's very flat right now. This might attempt to retest 13.29 to get back up to this this bar rate over here. But if we push up and start rejecting, we have to lose essentially 13 flats to start remaining more bearish. We're still holding support. So I think we had a flat day. We're very flat, not doing much. Might be a rebound and some sideways price action. Might attempt a rebound to about the 13.2 area. And if we fail there, then we're looking for a dip back down. No signs quite yet though. SoFi is looking weaker on the 4-hour after getting this big rejection. I could be looking for a move back down to 15 if that fails. Since we're looking for essentially 14.75. So there's weakness on SoFi as we're making lower highs and lower lows. We need to reclaim 15.25 this 15.5 area at the very least, and then 15.8 to turn back up. But nonetheless, I think this is going to test 15. It might dip a little bit lower towards like 14.8 to 14.5. The IWM is looking weaker. We're barely holding 220, so we'll see if this holds or not. If this holds, we need to try to reclaim 225. Otherwise, there is going to be a risk of us dipping a little bit lower, closer to about like 218. So I think there's a risk of a rejection on the IWM to dip down to 218, and we'll have to see what happens from here. For AMD, we're on a nice downtrend right now. We're not doing the best of jobs at holding up. We're below our key EMAs. So you want to see it reclaim the EMAs to turn back up, get back above at least 125. Otherwise, this is favoring downside for 118 to 117.5 or below. So this is what we talked about yesterday, more downside on AMD. For ARM, we look a little bit weaker. There could be a falling wedge-like structure. I could be looking for that, but I'm not going to count on it quite yet. It still looks weaker. It might make its way down closer to about 129.8 before it tries to bounce, so just keep that in mind. Coin is looking, it's barely at support right now, around 273. If we hold this, we could be looking for a rebound for like 280, but if we end up eventually losing 273, we're looking for a dump, especially because when you look at the daily charts, okay, we have these gaps to fill down here, so just be a little bit careful. There's quite a few gaps down here on coin. So if we don't hold 273, there's going to be a risk of us coming down to fill some of these gaps and start dumping down to like 250, and then we could be hitting the 250s. So be careful at 273. You might see a lot of attempts to try to see buyers defend it and such, but there is still some weakness perpetuating on this chart. We'll have to see how things go. Amazon, I'm a little concerned because we were trying to bounce. We were looking good. Then we got a rejection and we weren't able to hold the 50 EMA. So tomorrow we'll have to see if Amazon can try to make a break of 225. If we can't do that and we reject again, there's a risk of it coming down to fill this gap to 221. It is looking a little bit more favorable. That's going to like pop a bit and start dipping to fill the gap down there. So there's still some weakness on this chart. Same thing on Meta. We had like a head and shoulders and we're rejecting. Notice that I tried to bounce back up to about 611 only to reject. And it might attempt to get back up to like the low 600s only to dip back down. But if we can't hold them, we could be dipping all the way down towards like the 580s. So just know we're making lower highs here. We could be dipping lower all the way down towards like the 586 area. We are rejecting off our 50 EMA, so this could continue to dip. So look for a rebound to 600 and a dip, and watch and see what happens from here. There is weaknesses for making lower highs on Meta, so please be very, very careful with this, especially as we're below 600. And I also say this because when you look at the daily, okay, just real quick, the daily has this gap over here, and I think there's another one down here. So be careful. It might be on its way closer to like 586 if we end up losing 590. So be careful with Meta. There's weakness. Same thing with Microsoft, same setup. I need to see it reclaim at least 440. Otherwise, if it doesn't do that after PCE comes out, there's going to be a risk of it dipping closer to this gap fill down to about 431. So there's still some weakness on Google. Microsoft and Google, excuse me, both of them. Google as well also has some downside. There's an imbalance down here around 186.5, then 184.37. If that fails us, we have this big gap down here. So I'm seeing a little bit of weakness. Now, 190 is a very psychological level, and so is 188. So I think that we might see some shuffling here and look for a test of 188, and we'll see if we hold that or not. I want to see it reclaim like at least 194 to turn back up. If not, this does favor downside a bit more. So the market's looking weak. GameStop could be dipping to about 28.29. AMC might be dipping closer to 4 flat before it begins to consolidate, so be careful with that. And then for a few more, we have DJT. It might retest 34.6. If that fails us, I'm looking for 32. The VIX, it dipped a bit and then it bounced, so we'll see if this continues to push. Overall, it still looks a little bit more bullish. The 10-year Treasury yield is still breaking out because the Fed announced they're going to be cutting rates or less than what they initially expected going into next year. And the dollar is breaking out, which tends to be bearish for the markets. So we have a lot of confluence that suggests there's more downside coming, and the charts are still showing some weakness in my view. Now, whether or not that truly happens is, of course, going to depend on this data. So we'll see what happens with this. But I just want to say that right now, technically speaking, the market is showing weakness. We have not lost critical support to turn super bearish yet, but there is a risk of that. So please be very, very open-minded. Thank you all so much for listening. Have a good rest of your day, and I'll be back tomorrow before market open for another update. I wish you all the best, and I'll see you guys very soon. Thank you, and peace out.